But if you compare what's happened in terms of earnings, the large cap universe is flattish, but mid cap universe has outperformed in terms of earnings. Going forward, do you expect earnings from large caps to be better in the second half of FY26? And is the stage set for double-digit earnings growth in FY27? Looking at all the factors like the recent GST reforms, growth figures that have just come in, and of course we'll talk about the rate cut trajectory in just a bit. But in terms of earnings, how is it looking?
Q2 earnings were promising. I think top line, bottom line both shown better performance for large caps as well as small and mid cap. More so in the mid cap and small caps. Mid caps were better. So that's where we see some green shoots. Government has taken initiatives on consumption side, whether it comes to the direct taxes relief and that increase the disposable income, and also we've seen the rationalization of GST slabs. So, in last few years, government was pushing more capex. Hence, we were seeing the more interest in the PSUs and industrials and so on. But in last 6 months or so, we've seen more drive from the government towards consumption. So that should help us to see a better recovery, more broad-based recovery rather than concentrated one. This year, earning growth is looking to be about 9%, and that the quality of earning will improve dramatically in the next year. This year, banks will have a flattish kind of a growth, maybe 1% kind of a earning growth. But next year, banking sector is looking for a high teens kind of a growth. So that's where the quality of earning, if you slice and dice it with the sectors, you will see that the quality of earning in FY27 will be better. We are hoping that we will get close to 15-16% kind of earning growth for Nifty companies. And that's where the valuations are looking reasonable. If we factor the 15-16% kind of growth, we'll have a 20 multiples for the FY27 earnings for Nifty. We'll have to be very selective in the mid cap and small cap because that's where markets have been punishing and rewarding the earnings also. And that trend will continue. Wherever we will see the earning growths will be good, markets will reward those counters. And wherever earning growths will be not up to the expectations, the punishment will be even more severe.